Hey everyone, and welcome. Today we're diving into something you've absolutely felt before, but maybe you just didn't have a name for it. We're talking about the secret wiring inside your brain that pretty much controls how you think about money. It's called mental accounting, and trust me, it secretly shapes almost every single financial decision you make.
So let's just jump right in with a big question. Have you ever wondered about this? The market takes a little dip, and boom, suddenly it feels like everyone is running for the exits, panic selling. And it's not just rookies. We're talking about seasoned, smart investors getting swept up in it. It doesn't really add up from a purely logical standpoint, does it? Well, it turns out the answer isn't really hidden in market charts or financial news. Nope, it's way deeper than that. The answer is inside our own heads. It's all about the quirks in our brain's wiring and how we actually perceive money. And that is exactly what we are going to unpack today.
All right, so let's start with this big puzzle. Why on earth do we as investors so often become our own worst enemies? As it turns out, a couple of really powerful built-in biases can explain a whole lot of it.
Okay, first up, we've got a true heavyweight in behavioral economics, loss aversion. Now, get this. Study after study shows that the psychological pain of losing, say, $100, feels about twice as bad as the pleasure you get from gaining that same $100. It's not just a vague feeling. It's a hardwired part of our operating system that makes us absolutely terrified of taking a loss. And that leads us right to the main event, mental accounting. See, our brains don't just see our money as one big fungible pile. Oh no. Instead, we create all these little invisible buckets. This is my investing bucket, this is the vacation bucket, and this over here is the found money bucket. And because we treat each one totally differently, it has huge consequences for how we think about our gains and losses. And how you set up these buckets? Well, that changes everything. Think about it for a second. Do you look at each individual stock you own like it's a separate little test? That's what we call individual stock accounting. And it makes every single downturn feel like a personal failing. The other way to do it is portfolio accounting, where you zoom out and look at the big picture. Sure, one stock might be down, but if your whole portfolio is growing, then you're still winning. That simple shift in focus is absolutely critical. And this just shows how our feelings about risk are not set in stone. They're constantly changing. It's a concept called dynamic loss aversion. So if a stock has already made you some money, you start to feel like you're playing with house money, right? A little dip doesn't sting as much because you've got that cushion of prior gains. You might even get a little more comfortable with risk. But what if you've already lost money on it? Ouch. Suddenly you become hypersensitive to any more losses. Okay, so we've talked about these psychological theories. But what's actually physically happening inside our skulls when all of this is going on? Let's pop the hood and take a look at the biological machinery that drives these decisions. So here's a look at the key players. You can think of your prefrontal cortex as the brain's CEO. It's a logical part in charge of long-term planning. But then you've got the amygdala. That's more like your ancient, super-fast threat detector. It's the part that screams, danger, when it sees a stock price crashing. And then you've got other parts, like the nucleus accumbens, which is always chasing rewards, and the insula, which processes negative stuff like regret. And what you end up with is this constant tug-of-war happening inside your own head. You've got your rational CEO trying to stick to the 5-year plan, while that ancient threat detector is just mashing the panic button, screaming, sell everything, get out now! You know, most of our worst financial mistakes are made right there, in the chaos of that internal battle. So let's really zoom in on that moment of fear. What actually happens on a biological level when a simple number on a computer screen transforms into what our brain sees as a genuine, life-altering threat? And you really need to let this one sink in, because it's the whole key. To your brain, a big financial loss isn't just an abstract concept. It literally activates the exact same neural pathways as a physical injury or a painful social rejection. Your brain doesn't know the difference. It just feels pain. So when your brain perceives this threat, it floods your system with the stress hormone cortisol. And here is the truly cruel irony. You'd think that being stressed out would make you more careful, right? But studies show that high levels of cortisol can actually push you to take more risks. It clouds your judgment and nudges you toward desperate Hail Mary plays. And this physiological state, it leads directly to a whole playbook of destructive behaviors. We're talking about things like revenge trading, trying to win all your money back in one crazy trade, or freezing up, just watching the loss get bigger and bigger because you can't bring yourself to click the sell button. And of course, the classic, doubling down on a losing bet. It's a downward spiral, and it's fueled by pure, raw emotion. Okay, I know that all sounds pretty grim, but here's the good news. We are not doomed to be slaves to our brain chemistry. There's absolutely a constructive path forward to help you recover your mindset after a really tough setback. So here it is, a practical 5-step game plan for recovery. Step 1 is simple. Just cool off. Walk away. Let those stress hormones settle down. Then you rethink it, and we'll talk more about that in a second. Next, you write about it, which has been shown to actually reduce the fear response in your brain. Then you get mindful to regain control. And finally, when you're ready, you ease back into the market, starting with smaller positions. Now, I really want to focus on that rethink it step because it is so important. This is all about what psychologists call cognitive reframing. It's the conscious choice to move away from shame and "I'm so stupid" and move towards an honest, objective analysis of what actually happened and what you can learn from it. And this whole process has a name. It's called self-assessment. It is the drive to see yourself accurately, even when the feedback is negative and stings a little. It's about prioritizing long-term improvement over protecting your ego in the short term. Really, it's about choosing the uncomfortable truth over a comfortable lie, because that's the only place real growth can happen. So how do we make this kind of thinking a permanent part of our mental toolkit? Well, the final piece of the puzzle is to build a system that helps shift us away from that emotional knee-jerk reaction and towards cool, calm, disciplined action. And really, it all boils down to a battle between two core motives. On one side, you have self-enhancement. That's our natural instinct to protect our ego and feel good about ourselves. But on the other side, you have self-assessment. That's the conscious choice to see ourselves clearly, flaws and all, so we can actually get better. The best traders learn to embrace the discomfort of self-assessment because they know it's the only path to long-term success. And look, this isn't just some abstract psychological theory. There are concrete, practical tools you can use. You can visualize exactly how you want to react to a market trigger. You can create simple if-then plans, like, if this stock drops 10%, then I will sell, no questions asked. You can even automate your trades to take emotion out of the equation entirely. These are all systems you build to protect yourself from yourself. And that really brings us to the end. The whole point of everything we've talked about today really comes down to this one final question. Are you consciously managing your portfolio with a clear, logical plan, or are your ancient emotional brain circuits managing you? Just understanding the difference between those two things, that's the first and most powerful step you can take to get back in control.